Okay, everybody, here we go. It's me, Gregory Mannarino. Still Friday. Lovely Friday. The 13th. Spooky. 2023. Let's talk. Okay, you're seeing a phenomenon here unfold. Maybe you know it. Maybe you don't. If you follow this blog, you're probably aware of it. That we have been speaking about. It's playing out right before our freaking eyeballs. Oh, we got a nice warning today from Standard & Poor's, which we'll cover in just a little bit here. But let's just refocus on this market. You and I, right here on this blog, have discussed that if two things happen, just two, okay, maybe a third, but let's just stick to two for now, we would see something occur. Number one, the illusion of stability here in the debt market. Well, that is clearly going on. It's an amazing thing. I mean, I'll be honest with you, towards the end of last year, when we were watching bond yields rise globally, I kept saying, I think it's going to turn around. It's, no, central banks aren't done. It kept going on and going on, and I was starting to sweat. I was starting to sweat a little bit. Okay, Greg, this is going to look really bad for you because you've been pushing this for quite a while. What happened? A miracle. An absolute miracle. By some miraculous chance, this whole thing has reversed here. Global bond yields coming down. Here in the United States, 10-year yield lower. Relative dollar strength lower. That's the second part here. So we needed to see a few things. One, stability in the debt market, which we're clearly getting. Two, a weaker dollar on a relative basis, which we're clearly getting. And we discussed if this were to happen, well, the stock market would get all giddy about it. And of course, we would get some gains. And this has been playing out pretty nicely as of late. The third player here is crude oil. Crude oil is deciding to play along, and this is, again, not a shock, not a surprise whatsoever to anybody who follows this blog. What have I been telling you? What have we discussed here repeatedly? Okay, energy, commodities moving forward. This is it, okay? Commodities for the long haul, as you well know. What's Greg Mannarino's favorite asset on the planet? Yeah, you got it. Physical silver. I think it's the most undervalued asset in the world. And how does Greg Mannarino make that statement if you're new here? Well, I want you to do a little homework. It'll take you like a nanosecond. Look at the Dow gold ratio, Dow Jones Industrial Average gold ratio, gold-silver ratio. And you will see why Greg Mannarino says silver's it. It's the spot to be in. With regard to commodities in aggregate, start placing your bets here, okay? I've been talking a lot about commodities lately. I put out a list of exchange-traded funds which give you exposure to commodities. I put this out in my free newsletter. There's a lot of them here. Some I've spoken about here. I posted a few other ones in my newsletter, as I said. But, you don't got to look. Just look for large cap. Look for a large cap exchange traded fund that gives you exposure to commodities. Then look at the prospectus, read it. Okay, most people don't read these damn things. It's really not that hard, and see if it sounds like something you might be interested in. And look, you and I, we got this down. If you've been with me for any length of time, you know what's happening. You know why things are happening, and you're taking action. You're not just sitting back here doing nothing. You're taking action. And speaking of action, like I said, we have some serious stuff to talk about. So, yes, indeed, stability in the debt market, weaker dollar here, MMRI relatively stable, market's loving it. You also, not only did the stock market put on some gains today, gold and silver did well, Bitcoin 19,500, crypto's doing well here. As I said, crude oil catching a bid. It's really not a bad setup here for the market. Now, this morning, we're getting a slew of bank earnings, and it doesn't really look too good, especially with debt and loan defaults on the rise. And we haven't seen anything yet, but it doesn't matter. as I have said, it don't matter anymore. Nothing matters if they can maintain the illusion of stability in the debt market. And it's just an illusion, people. Just to give you another perspective on this, and I want to bring this to light yet again, the Federal Reserve is fully committed and involved in their repo operation, passing vast amounts of cash back and forth between institutions overnight, trillions of dollars. $2.5 trillion every single day. Forget about this $1.7 trillion spending budget. Okay, this is something the Fed does every single day without fail. $2.5 trillion on this on a Monday, $2.5 trillion on a Tuesday, $2.5 trillion on a Wednesday. Bang, 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 bang. And this is, what is this doing? It's tricking the system. It's tricking the system into believing that it is more liquid than it is. And the mechanism here is fully engaged. Pulling cash into the now, expanding wars, whatever it might be, they're going to fund it. And of course, they're going to rob you blind and me blind, of course, but that's just besides the point here. So I want you to pay attention to a couple of things. You know what? Before I even talk about Standard and Poor's, I want you to pay attention to something, and it probably is another phenomenon that you've paid attention to in the past. Let's see. Let's play a little game. So apparently the White House COVID response coordinator, who wants you to be very, very scared. I'm not scared. He wants you to be afraid because of this. You're going to love this. So this White House COVID response coordinator is warning of years of triple demics. Triple demics. Okay, now, I don't know how many of you watch TV. If you ever notice TV commercials, they do a lot of repeating, and it's usually in threes. Oh, buy this, buy this, buy this, do that, do that, do that. Now again, it's this three, it's this number three, the Trinity. There's all kinds of threes all over the place here. Three is a very powerful thing on the human mind. So now it's a triple demic, which you have to be afraid of. And, you have to make sure you run out there and get your, what's killing everyone. I think you pretty much are on the same page with me with that. I got to be very careful what I say here. Anyway, so watch for the 3 times repeat on commercials, and now the reference to a triple demic. It's interesting, very interesting play on words. Again, the twisting of minds, the minds of men and women is nothing new. This propaganda thing has been in full effect since the beginning of time. Going back as far as you want to go, ancient times here. You see, let me just tell you something else here. Why do you think, for example, let's just go off on a tangent here real quick. Why do you think the founders of this nation wanted the separation between church and state? Isn't that interesting? Well, if you are someone who understands history or likes to read like I do, you would know that the reason for that was in ancient times, you couldn't disconnect politics from religion. Why do you think there are kings, queens, monarchs, emperors? They were put there by, the divine, and a lot of these things of these individuals consider themselves as gods as well. Politics and religion were fully linked, and it's interesting how the development of religions actually came about. A lot of it because of this interaction between politics and religion. And today, again, there's that separation of it all, and we found it has come to light that these emperors and pharaohs and kings and queens and monarchs, they were not put there by the Almighty. But it's interesting to see how this whole thing played out if you understand history at all. Anyway, besides that, let's talk about this here. This is a stark warning from Standard and Poor's. So this is verbatim. This isn't Greg Mannarino talking. This is what they're saying. The world is at risk of a severe crisis as governments, households, and financial institutions binge on debt. Does that sound about right to you? Well, you know what? Greg Mannarino is going to have to agree with that. Now listen to this. So according to Standard & Poor's ratings, Global debt is now 366% of output. This is absolutely not sustainable. Their words, okay, not just yours and mine. We understand that. This comes to 349% of gross domestic product. All right? Isn't that lovely? And the global economy is, and on top of this, the global economy is contracting rapidly as debt is ballooning. Now, this is Standard & Poor's. This isn't Greg Mannarino. But you knew all this before, so you don't have to listen to dog shit Standard & Poor's. You know the game they were playing during the last meltdown here, keeping their AAA ratings on these mortgage-backed securities that were worthless, and we found that out to be true. But it's part of the game. You all know that. So anyway, that's the story. What's happening here? It almost, to me right now, looks like a Goldilocks situation for this market. If again, look, I am not saying that the powers that be are watching the MMRI, but the MMRI, the Mannarino Market Risk Indicator, has been dead on. It's been dead on since it's been introduced here. The MMRI crossed the 300. All of a sudden, panic breaks out. They start floating out Fed presidents, Nick the Pig. You remember all that? All of a sudden, the MMRI drops along with global bond yields, the relative strength of the dollar. Now it seems the new line is at 250. And now they seem to be hell-bent on making sure that the MMRI stays below 250. And if they can maintain this, I don't care what happens. The economy could free fall faster. Earnings could come in way worse than expected, although I don't believe that's the case. What's going to happen here is the same as every single other earnings season. You get these corporations who project lower. So all of a sudden, when they get this surprise upside, oh, look, we're doing great. And then, of course, the game is played and the stocks get bid up. But it doesn't matter in this environment at all. Again, it's every single thing. I'm going to tell you this again in case you're new here or maybe you haven't heard this before. Everything hinges on the debt market. If the illusion is maintained in the debt market, some kind of stability, if the dollar relative strength comes down, and if crude oil feels like playing, and I think it will here, with energy prices skyrocketing, well, where do you think stocks are going to go? You think there's any bearing on reality? You think, look, the detachment between the economy, which is free falling, and the stock market just seems to defy gravity? That's because that's central banks. They're buying it all, including the stock market. You know that. Anyway, I hope this stuff makes sense to you people. I really, really do. But I also hope that you disconnect yourself from this for a couple of days here. We got a 3-day weekend. This market is closed on Monday. You will not see this face until Monday. I will do a markets look ahead, but we got a couple of days off, you and me. You know, I like that. You know, go do something fun. Take out some time for yourself. I don't know. And it doesn't mean you have to go out and melt your credit cards. I think people are getting ahead of themselves with all these increases that they're not asking for. Oh yeah, it's out of control phenomenon that you and I we knew would happen, and it's right here yet again. It's astonishing to me. This guy loves you a lot, and I'm going to leave you off with my favorite 3 things. But first, you're going to bring it in. Okay, no one's looking, and even if they are, who gives a damn? Really, who gives a damn? Ready? Love each other. Care about each other. Be charitable people. Have a great weekend. Safe. I will see you Monday, I promise. And well,